Good morning, traders. It's Tuesday, September 30th. Looking at the charts, equities taking a little bit of a breather today, down slightly with most money coming out of small caps. The Russell 2000 down about 1/3%, but overall it's a pretty flat session. Now yesterday the markets moved pretty much as expected in terms of, we talked about the gap higher and how we should expect some type of fade back down. A fade means price filling this price gap, and as we know, almost all price gaps on the S&P 500 get filled, and then the market can usually move higher. And usually the gap is filled within the first hour or two, or usually within 1 to 3 sessions, depending on the type of gap. You can see we had a gap down here, and of course it took 1 session, 2 sessions to fill that gap initially, and then we created a gap to the upside. So the market's constantly creating these bridges of jumping from kind of panic to kind of short-term FOMO, back and forth. So I want to touch on a couple things real quick. So somebody was making a comment last night saying, how is the market oversold when the stock market's been going up huge for years, and it's had this huge rally from the April lows? Well, this is the one thing that I know is tough to follow, because I jump between 3 charts: daily, 30-minute, 10-minute chart, and sometimes I even flip over to the weekly chart of the long-term trend. So when I say something is oversold, I am talking, in this scenario, yesterday I was talking about this lime green oversold area. The market could be overbought, which I believe it is. Its valuations are out of whack. The market is way overbought. But on a short-term basis, intraday basis, there's extreme short-term lows that are oversold, and this is the oversold condition. So you need to try to follow where my cursor is. I think the cursor is where I'm looking. So I will try to always be like, long-term trend is up over here on the daily chart. The market is overbought on the daily chart. But if we go to the intraday chart, it dipped into short-term oversold territory. And then, of course, yesterday we had a gap higher over the weekend that actually kind of put it in short-term kind of in overbought territory, just meaning everybody was excited. They bought at the open, expecting Friday's strong close to want to move higher. And of course, when there's that little bit of a crowded play, these are very, very small moves. Usually the market kind of has to negate those and kind of fizzle them out. So anyways, try to pay attention to where my cursor is. That is where my eyes are in the charts that I'm talking on. Oversold, overbought, just like that. Anyway, let's take a look where money is flowing today. So a little bit out of stocks. We do have bonds trading slightly higher this morning. A nice pop yesterday in bonds, and it's trying to figure out if it is going to start to move higher. Again, we've talked about it on a shorter term basis. On the daily chart, we do have it channeling to the upside. We do have a crossover, a bow tie here, which means all the moving averages have gone from a downtrend to now they've kind of crossed over and created a bow tie where they cross over, and now they're all sloping up and moving higher, so that we could be in the early stages of bonds trying to find a bottom. When we zoom out on the chart, obviously you can tell it's still kind of in a long-term downtrend, trying to figure out if it's just a bounce, a pause before going lower, or if it is actually going to start to rally up and build a big foundation and eventually start to break higher. I would say like this could be kind of a bottoming formation somewhere in here, potentially even still way up here, meaning price could rally up, build a base over several months, and then next year start to break through this area and then start to go higher. So there's a lot of work that needs to be done in this overall pattern still before I think we get too excited. But short-term wise, when we zoom in, it is starting to show signs that is, short-term wise, the moving averages are turning up, but don't get too excited just yet. If we take a look over at, let's see here. Let's take a look over at the dollar. We have the dollar down slightly. Again, the dollar is trying to figure out if it's going to find a bottom and start to move higher here, or if it's going to continue to flounder. Overall, got oversold, hit a multi-year low, had a knee-jerk reaction, bounce to the upside. We have been seeing money move towards the dollar a little bit. When we look at gold and silver, they're both pulling back a little bit today. They had a nice push up yesterday. They had a big run up in overnight trading last night, and we see some pretty heavy selling down on the 10-minute chart down here. So we definitely have something going on where there's some profit taking, some selling going on in the gold space. And we'll just have to see. I'm not sure what news or anything hit there, but overall gold continues to still be in the subtrend, and it's going to be a series of rally, pullback. It's usually never a straight ride up. Usually you've got to have a series of stair stepping along the way, and that's kind of what it's doing now. Let's take a quick look over at silver. I don't think I covered silver yesterday. Silver, again, a little bit of it's had a nice pop and it's pausing. This is what we want. This is what we want to see, these pops and pauses, and we want to see it run up this 5-day moving average, this light blue line in the background here. That's a high momentum move. Hopefully it can hold and keep that traction, and that means in a day or two, we could easily see the precious metal space pop and push higher again. When we look at the 30-minute chart, we've had a nice run up. It's building a little bit of a bull flag through here. It is going to pull back down to 46.32. So 46.32, somewhere down over here. So it is building this bull flag pattern that it could very easily have that next leg up. And just based on Fibonacci, would push us up for another substantial move over the next couple days. It could be another 3-4%. It could rally once it finds a bottom in the market here. Crude oil took a pretty good haircut yesterday and again today. We talked about how it popped up into these areas. I mentioned how usually it wants to kind of pop and hook up, and it can get sold into very quickly, just like over here, And we're starting to see that selling come in. Again, I'm not bullish on the energy space. I'm pretty bearish overall, unless there's some news or some crazy war scenario that's going to really spike things. The overall trend when we look at oil is to the downside. Just like bonds, it's a long-term downtrend and it's struggling. Rallies get sold into, so don't get too excited about any pop or rally in this space. If we take a look over at the hot list, we are still long XLC from our entry trigger when the stock market gave us a buy signal. We've hit our first profit target on this. We're up about 9%. It is building out a bull flag. If the stock market has another leg higher and pushes, we should see this have a fairly significant run and hopefully run up to our 15% target on this sector ETF. Now, we're also long gold. Again, as this market's pushing higher, we're long the gold ETF. Actually, let me put it in here, PHYS, which is the Sprott Money Physical Gold. Again, this is the same as GLD or any other physical gold ETF. Had a nice move up there yesterday. Some of you are asking, will we get out? Like, is there any reason we would close out our full trade if we hit our target at $30.75 at the upside? That's about an 8.5% upside move from where we are. So it's still a long ways for gold. That's several big back-to-back days to the upside. There's potential we could just put a trailing stop on it, but based on my analysis and based on how I generally do these discretionary trades, I have rules in place, and we use Fibonacci extension for these. And I usually use the physical gold itself, but you can see these levels right through here. We have this upside target of 100% measured move. We did hit our first target at the 618. We've locked in partial profits. We've moved our stop up. Now we're going for this run to 30.75 is our upside target, which if we hit that level, that is generally where the market runs out of steam. And from there could consolidate for months. And so I don't really want to hold something that can consolidate, or worse, sometimes it will actually roll over and then go down and not come back for months or years potentially. So I like to hit targets, I like to scale out, and then I look for a fresh new trade. You could put in a trailing stop and run higher. If price is exploding and going parabolic, which it could do, I've talked about how it could blast past our target. Depending on how it goes, we might do that. It is a discretionary trade. It's a nice kind of bonus play. And if there is a lot of momentum, potentially we could try and pull it off for a couple of days and just see if we get further spike to close out at a higher price. So, but really you got to play it by ear, by one bar at a time to get that feeling. I don't know what the market will look and feel like when it gets there. So it's very much so stick with the plan, execute the plan. Worst case scenario, you lock in nice profits. You had an amazing trade. Or we try to get a little fancy and maybe try and run it higher. But again, that's breaking the rules. I generally don't like to do that. When we hit these levels, the market can go a little bit higher, but generally it pulls back and reverses or pauses for months after we hit these Fibonacci levels. One of the members was wondering, how do we sort the hot list? Now, the hot list is based on more so momentum or multiple time frames and money flows. So there's cycles involved as well. There's a lot that goes into this. So more or less, it's telling us which one has the most upward momentum on various time frames and has money flowing into them. And so that kind of gives us the order of these. Now, they can go from the top of the list to the bottom of the list fairly quickly. In fact, we saw GDX. It was at the top of the list a few months ago, and then it was at the bottom of the list. Now, miners, silver, gold miners, copper, lithium, all these are back to the top of the list. So it's based on where money is flowing. And if we go back and take a look at these stages, when we see sectors flipping and flopping from the top to the bottom and back again, usually that's the sign that we're in a stage 3 topping phase. And I've gone into this many times. I'll cover it another time. But this brings me into another question. One of the members was talking about how his friends are bragging to him about how the gains that they've had in the markets with the S&P 500 running higher. Let me pull it up here. And how they've got these big gains on the year, and how we're managing our risk and we're not keeping up with the stock market. And this is one of those signs that we're getting close, I think, to a fairly significant. So when your friends are bragging about how much they're making, and everybody seems to be making money on all their trades, and the money's coming easily, your account's going up by leaps and bounds, usually that's a sign that the music is coming to an end. And this is kind of this phase right here, this kind of thrill and euphoric phase where everybody thinks they're a genius. They're doing so well. They know what they're doing. And this is where our strategy starts to shine. Well, this is where people start to feel FOMO because their friends who don't know much or who are doing an old strategy that is going to catch up to them and cost them is making them feel like they're being left behind. And that's what happens when you manage money. We fall behind on some rallies, but when one of these crashes hit and your friend gives it all back, and then it lasts for 3, 5, 10 years, and our accounts keep going up, that's when we shine. That's when it feels pretty darn good to be like, so how are you doing now? And so try not to get too caught in. We're going to always underperform on the upside because we trim off profits as we go up. We wait for a new little market correction. We get back in again. When the market does correct, we don't really lose money. We can also grow our accounts where most people lose money and waste time through that phase. So just keep in mind, this is what we're seeing with like the IWM. If we just flip to the weekly chart, this is what I've been talking about. People think they're geniuses. The buy and hold, the buy the dippers and all that stuff, and the people who buy all the the fast moving stuff, they all look like heroes. They all are going to be pushing and excited and feeling really good. But this is what happens near major market tops. Everybody gets really bullish. You see big pops. And this is the majority of small cap stocks. And most people's aggressive trading accounts have had this strong push. We see this with IWC, which are the micro caps as well. We're right up into these highs here in the past, right up into these highs. So just keep in mind, the people who are bragging and who feel really good and are saying, they know what they're doing. Do they really know what they're doing? That's the big question. And most people don't. And when the bloodbath comes, they will pay for it, and they'll give it mostly back. So anyways, that's it for today. Talk to you soon. Bye-bye.